Good evening. This episode of the Intraday Price Action Recap is being brought to you by the Smart Money Manuscript. Hello, my name is Timothy Lee Rogers Sr., and I'm the creator of the Smart Money Manuscript. But Tim, what is the Smart Money Manuscript? The Smart Money Manuscript is your roadmap to financial freedom. Inside this powerful course designed to transform your financial future, I've meticulously condensed over 1,000 of my public YouTube videos into 40 highly efficient lessons that span just 2.5 hours. This course is strategically designed into 4 phases to help guide your learning in the most logical and effective way possible. Phase 1 lays the groundwork, covering essential financial literacy like budgeting, banking, and taxes. In phase 2, you'll move beyond the basics, learning about brokerage accounts, figuring out how much you need for your own individual retirement. You learn about how to do fundamental research on companies, and you'll also learn how to conduct technical analysis by looking at stock charts. Phase 3 empowers you to build a robust portfolio and leverage your capital using advanced techniques like options and futures, and it also teaches you the importance of backtesting your strategies. Finally, phase 4 takes a deep dive into the advanced ICT concepts, giving you a professional edge. Each lesson includes a short quiz to help solidify your understanding. By the end of this journey, you'll have the confidence and tool that you need to make intelligent investing decisions, manage your money without fear or ambiguity. So if you want to be a long-term buy and hold investor, if you want to be a swing trader, if you want to be a day trader, if you want to trade stocks, if you want to trade options, if you want to trade futures, the Smart Money Manuscript is for you for $69.99. Yes, $69.99 for all of this here. Mic check, mic check, mic check. All right, how y'all doing this evening, man? I was having some technical difficulties, and man, price just dropped. I just glanced over at my chart, and the first 5-minute candle dumped from where it opened up to where it closed was 88.25 points. And from peak to trough, it was 107.75 points. Right. On that 1 5-minute candle there. I just peeked over there at the charty tart. Good evening, everybody. If this is your first time tuning in to Tim's Tidbits, please allow me to say welcome. If it's not your first time tuning in to Tim's Tidbits, I still want to say welcome. But I also want to give you a nice hearty, well, thank you for always tuning in to Tim's Tidbits. If you don't know who I am, my name is Timothy Lee Rogers Sr., a.k.a. Aranya Grande. That's just big spot of you don't hablo español. And you're in tune to another episode of the Intraday Price Action Recap. If you stuck around for or if you was here for the trailer, you'll see that this episode of the Intraday Price Action Recap is brought to you by none other than myself, the creator of the Smart Money Manuscript. The first link in the description below. If you click on it, go over to WAP and spend the best $69.99 you will ever spend in your life on a trading and investing course. Your one-stop shop for everything you need to become a highly prepared trader / investor, whatever you want to be. $69.99, and it comes with monthly Q&As via the Smart Money Mentorship with yours truly every second Saturday at 12 p.m. Eastern Standard Time. Inside the live stream classroom on WAP, you pull up and you ask your burning questions to moi, the creator of the Smart Money Manuscript. Where else can you get such a deal? Where can you get such a deal? No, 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 no. I'm not going to give out fancy plaques. You know what I'm saying? I have fancy plaques where I spent $4,500 on courses. And, when I do certain things, I got a fancy, smancy plaque. I do have it. I'm not giving out fancy plaques. I'm not going to do it. All right. Not going to sugarcoat anything. Not going to tell you it's going to be so easy. I'm not going to give you any signals. Only thing I'm going to do is impart on you the things that's in my noggin that I have learned and give it to you in the way that I understand it. And then I'm going to give you mentorship via the Smart Money Mentorship, where you can ask your questions on how to actually apply this stuff. All for the low cost of $69.99. Take advantage. Now, let me see who we got up in here. Mike Pence Fly is up in here, hanging out with Empire Trades. We got Marco up in here. We got Yolanda up in here. We got Here to Learn and Share up in here, the spam bot. We got Kim up in here. I see more numbers than I see names, but them know the names I see, so them all the names I'm gonna say. Let's get to it, man. How was y'all day to day? Oh, public service announcement. I will no longer, meaning never, share the Zoom link on YouTube again. If you're out there in the U of the tube land and you like, hey, Tim, I want to get on the Zoom so I can unmute and ask my hard-hitting questions. I'm sorry. When was that? Monday? When did the crank yanker come up here? Monday, right? I'm never sharing the Zoom link on Al Gore's internet again because a crank yanker infiltrated me again. I had it set to where I have to let you in, and then somebody popped up and said, John iPhone. For those who don't know, there is a member in the gang named John, right? He don't always comment. He don't always pop up, but there's a member named John, right? And so when I saw John iPhone, I said, hey, this John. Because I see Empire Trades, I'll see Yolanda, I'll see Venus, I'll see Marco, I see Rhonda, I see Deborah. I'd be seeing names that I know from the gang. So I click and let them in. Right. Then I saw John iPhone. Right. I'm like, oh, that's John. Let me let him in. And as soon as I did that, it was a crank yanker. Yep. Playing that same video from a long time ago. Plus, they added in a little bit more discuss. Those who want to watch the replay from Monday's episode is back up now. It took about 24 hours for it to post. Then I had to edit it. Then it took, a little bit more time to repost again. So now if you want to go back and rewatch Monday, I put a notification in the Discord, let everybody know it was back up and running yesterday, I think. But because of the crank yanker, right? I'm never sharing the Zoom link on public sites anymore. I will only share the Zoom link inside the Discord, right? So if you want to get your hard-hitting question answered, feel free to drop it in the chat. I'll try to do my best at monitoring the chat. I'll try to do better at monitoring the chat to see if there's a question over there. But hey, that's it. It is what it is. It is what it is. Because with me, I know how I am. And, I shut the whole thing down. I shut it down. Pull the plug on everything. But I said, I'm not going to do that. I'm going to still come out here and do the Lord's work. But no more sharing the link on YouTube. So again, did Price do anything today that caught you off guard? If Price did something today that caught you off guard, Drop it in the chat if you're on YouTube. If you're in the Zoom, unmute and say, hey, Tim, I expected price to do this, but it did that. Can you go through price with me and see what I missed? What exactly did I miss? Yes, not taking out the lows. Tyreek said, I think I said that right. Tyreek said, shout out Tyreek. He said he came from, he had been hanging out in Tremaine's channel. Shout out Tremaine. Nephew be putting out some good information. I ain't gonna hold you, right? But he said yes, not taking out the lows. What do we always say? Right? What do we always say? We never try to force the algorithm to take out a level of liquidity, right? Especially if it's going against the higher time frame, right? And taking out sell side on the daily low. I'm assuming you're talking about the daily low. Are you talking about the daily low, Tyreek? You can't unmute and talk to me because I can't share the link in the YouTube because the crank yanker got me. So now I got to wait for the 3 to 4 second delay for me to ask, and then for you to respond, and then for me to get it right. We got to deal with that little delay now. All right. So the overall time frame, right? If we go to the higher time frame, right? Looking at the higher time frame, right, is in a buy program. Right, the higher time frame is in the buy program. We said on the higher time frame, we had come down into our original. This is not the original. Our original, that's not the original. Our original 20-day look back. Right, we came into our original lower quadrant of the 20-day look back. We took out sell side liquidity, internal sell side liquidity, right? And then we rattled off, and we was respecting discount PD arrays on the lower time frame. So we said the higher time frame was still in a buy program. Okay, so since the higher time frame is in a buy program, right? Any intraday sell programs, we're supposed to take our base hits, right? We take our base hits. So when we go to our intraday time frame, right here, when we drop down here, right, when we drop down here and came to that anticipatory reactionary point on the higher time frame, remember that was our lower quadrant right there. Let me go back for people who, can't see it without the magic lines on the screen, right? That's our original 20-day look back when we first came up and made that high. From that low to that high, at that time when price started selling down, this was our lower quadrant for the 20-day look back. Now, this is still the lower quadrant for the 40-day look back. That's why I still have it on my chart, right? But if you notice up here at the 75, at the upper quadrant right there, where I'm blinking that on and off, you notice it's a little bit lighter, right? And the reason why I have it a little bit like, can anybody tell me? Let's see if y'all remember. Why do I have it a little bit lighter now? Why do I have that upper quadrant right there showing a little bit lighter now? And then I have another upper quadrant in equilibrium here that's darker. Why do I have that showing a little bit lighter now?
So primary and a secondary, you took into account the new 20-day look back and kept the original one there in a lighter color.
Very good. Now these quadrants here, if I come here and I turn the quadrants on, that's the low, that's the lower quadrant, then that's the high, right? That's the 20-day look back for where we are currently, right? Where we are currently. This is the lowest low, and this is the highest high of the current 20-day look back, right? So now I'm still, now let me turn all of these off. I don't need all of them on because I just want to see what price is near right now on the screen. All right. I still want to be aware of what's going on with these quadrants, right? Why? Because now that falls within my 40-day look back. So I don't want to just forget about these levels, right? I still want to see what's going on with them because they're still within my IPTA look back range, right? So since price is trading up here, that's why I had the lower portions and the high turned off, because the high for both look back periods is that monthly high. So there's no need for me to have that extra line up there, right? And then we're trading up here, right, in between the equilibrium in the upper quadrant of both. So I didn't need to have both equilibriums there. That's why I just got both upper quadrants and the current 20-day look back equilibrium. All right. Now back to what I was saying. The higher time frame is in a buy program. So on the intraday time frame, we had come down in this sell program, right? And we came to an anticipatory reactionary point. And then on the 60-minute time frame here, right, price has switched to a buy program, right? This buy program, yes, it's in the midst of a larger sell program, right? That's not, right, invalidated until we make a new high, but it's still a short-term buy program. So right now we in a short-term buy program, right? Price seems to be trying to gun toward this buy side here. We did take this buy side today, but price seems like it's gunning toward these relative equal highs that's resting here at the low of this SIBI that we just created. I think it's for yesterday. Let me see how do I have that marked? I don't have the date on there. I need to fix that. And we have the current 20-day look back upper quadrant, and we have the 40-day look back upper quadrant, right? That was the old 20-day. When I say the 40-day, that's the old 20-day look back. So that's the 40-day look back upper quadrant. All right. So high time frame buy program, right? Short-term intraday buy program. Okay. Now, since we're in a short-term buy program, the higher time frame is in a buy program. Trying to force lows is not what you want to do, right? What do? We target base hits based off of algorithmic principles. All right. Will it take out that low? Probably will. Do I want it to take out that low? I could care less, right? I could care less. But when you're trading against the grain, we take base hits, right? So today, when we opened up like 9:30, price just died off, right? Right. That low right there, be happy with it. That low right there, be happy with it. That low right there, be happy with it. Anytime you come to a low, be happy with what you got, right? And then when price got down here, right, and we started stalling around these quadrant levels, you know what I'm saying? This is when you really don't want to try to force anything going lower, right? You don't want to try. Once we got down here and we started stalling, right? First of all, we got here, right? And we started stalling, and then we came here, right here. Somebody tell me what this wick right here did on this 11 o'clock candle, right? On this 11 o'clock candle, right? And it closed here. That means we're going into lunch when this closed right here, right? This closed at 12 o'clock. So right here, when we wick down here and closed there, going into lunch, when we was just dying off right here, what did this hourly candle right here do that should have raised eyebrows about trying to force it into that sell side right there? It's got something to do with looking to the left,
It swept that low, that liquidity on all of those candles as far as the body.
Ding, ding,
Okay.
ding, ding. Yolanda on fire today.
Well, what'd she say? I missed it.
Rewind it and listen again. She said it swept liquidity in reference to all of these relative equal bodies, because this right here is the lowest close out of all this price action right here. So we know when we have relative equal bodies like that, there is liquidity resting under these. Why is that? Because everything runs off of the bodies. The open, the high, the open and the close is what tells the story. The wicks do the damage. So the beef or the bulk of the trading is found in these bodies. So that closure right there, resting on that lower quadrant right there, that closure right there, if you go to a line chart, this right here, and we're going to look at, I'm going to put a line on that wick. I'm going to put a line on that wick. And I'm going to put a line on, well, that already got a line on that wick. And then I'm going to circle this close right here. And then I'm going to change it to a line chart, right? Go to a line chart. See it right there? That's the lowest close right there. That don't exist. That don't exist. And that don't exist. So there's the liquidity right there, right? So we drop down with that wick, swept all of this liquidity right here, and then we traded back up here and closed up here, right? So all we have done is made a higher low. You see what I'm saying? We haven't broken any structure to the downside. So there's no reason for us to be thinking, hey, I got to take that low right now. No, you've come down here and you've manipulated out liquidity and rejected off of it and respected this quadrant level right here. Right. So now whenever we reject a low, what do we anticipate? Some type of retracement, right? We anticipate some type of retracement because we're rejecting the low. What's the reasonable target? The high that sent you there. Do we have to make it back to the high? No, we don't. Just like when we come up here and reject off of a high, what's the reasonable target? The low that sent us there. Do we have to make it there? No, we don't. You know what I'm saying? But it'd be nice if we do. Okay. So now that we've swept liquidity here and got a nice rejection, and we respecting that level right now. So when we get this rejection, what are we watching? Right. Somebody tell me, what do we watch? It's two things you're going to be watching after this rejection right here. What are the two things you're going to be watching? It's two of them here because we got them on our chart, right? What are the two things we're going to be watching after we get this rejection right here? What are we looking at to act as support on price? Two things, right? They're right on your screen in front of you. What are these two things that we're going to be watching to see if it wants to act as support to price because we just swept liquidity and got a rejection?
The quadrant level and then the wick of the candle that just swept. You want to see how that next candle respects it.
Yes. So this is our discount PD array right here, right? Because we rejected, we swept liquidity, then rejected, got that closure, right? So this is our, let's just say this time frame, right? Our current support level, right? So we're looking at our current support level, right? What do? We always want to put our quads on there. Quads here, the DJs, right? We want to put our quads on our support level, right? Let's zoom in so we can really see this. Now that we got that rejection, yes, right? We may want that to be hit, but guess what? The 60-minute time frame is in a buy program. The daily time frame is in a buy program. The weekly is in a buy. Everything is in a buy program. So we're going against the grain. So when we sweep liquidity and get a nice rejection, right? We're not trying to force this. Now we're watching to see if the algorithm shows a willingness to continue into that, right? And right now at this point here, what's designed to stop us from getting there? This quadrant and that daily quadrant support level, right? That quadrant right there, that's the lower quadrant of a daily wick, right? That's the lower quadrant of a daily wick right there. Okay. This right here, that's a wick. So now we see price trades down into the upper quadrant of the wick, right? Below the quadrant, down into the low of the wick, and then price takes off. Whenever you are bullish, where do you want to see sensitivity after trading down into a discount PD array? Where do you want to see that sensitivity happen? Talk to me. Where do you want to see that sensitivity happen at? Anybody but Yolanda. Y'all, Yolanda answering everything. Light-skinned Deborah, are you here?
Yes.
Where do you want to see that sensitivity at?
At the upper part of the wick.
Yes, you want to see it. You want to see sensitivity in this upper half, the premium of it, and you want for extreme bullishness, you want to see that sensitivity at that upper quadrant and go. You don't even want to see it make it to 50%. All right. So this is where you're looking for the sensitivity in the premium, the upper half, and you really want to see it hit that 25%, even if it make it there and go. Right. So you're looking for extreme sensitivity in the upper half. Okay. And really want to see it respect that 25%. So when we come in here and we see we get down in there, right, and we blast back off, right now at that point there, right, this is the 12 p.m. candle, right? So that's a 12 p.m. candle. And so at this point here, right, we're getting long in the tooth in the day after a very large move, right? We had a large move in the Asian. We had a large move in the London. And then we had an extremely large move in the New York, right? We had large moves in every single session, right? We're going into the afternoon session. What's the probability of price just giving us another large move? Not very high. Why? Because typically when price gives us a large move, right, it cools off, right? Look at this right here. Large move, consolidate. Large move, consolidate. Large move, what are we expecting now? Consolidate, right? This is the start of the new day right here. Large move, consolidate, right? So once we got this large move, we didn't take that low, and then we started respecting our discount PD arrays. Once you start respecting your discount PD arrays, what is that signs of? A buy program or a sell program? When you're respecting discount PD arrays, is that leaning towards a buy program or a sell program? Talk. Say what?
Buy program.
Buy program, right? So we've had a large move. Now we're starting to show signs of a buy program, right? So now, since we're showing signs of a buy program, right, we're not looking for price to just come back and just dump like this right here. Why? Because we're starting to respect discount PD arrays. We're not expecting prices to blast off to the moon. Why? Because we just got a large move right here. Right? And so based off the type of day we've been having, we get a large move consolidation, a large move consolidation, a large move. Now we're anticipating that consolidation. Why are we anticipating that consolidation? Right? Because whenever price gives you like a really large move, right, you're going to anticipate some type of engineering of liquidity, right? That can come in the form of manipulating the opposite side, or that can come in the form of consolidation, right? My favorite is when it comes in the form of consolidation, right? Because when it comes into the form of consolidation, okay, it gives you time to figure out what the algorithm is going to do next. Because once it starts to consolidate, now it has to break out of that consolidation. And when it breaks out of that consolidation, then it's going to start giving you signatures to let you know how can you participate. All right. So that low right there, once we didn't take it here and started to respect discount PD arrays, then for the short term, at least, that low should have been off the table. And you just want to wait for something of a little bit more higher probability, right? And just accept the fact that, hey, I didn't get a chance to participate in that move, and it is what it is. Live to trade another day, or just scalp inside the range. With Tim, how can I scalp within the range? You see these little things that we call quadrants, right? They're there for a reason, right? You say, Tim, you got 1,000,000 of them. I'm glad you said that. Why? Because we come over here to our gaps, right? Those are the quadrants on that new week opening gap. And where's my daily wick? My discount wick. These are the quadrants of the discount wick, right? So if I turn my discount wick off, right, this is these quadrants here. I'm looking at, matter of fact, let me turn off my new week opening gap also from the 10th, 27th. All right. So I don't know anything about that new week opening gap. I'm not paying attention to it. I'm oblivious to it. Okay. I have a discount wick right here. Right. Let me hide this for a second. I'll come back to that in a minute. All right. And Tyreek, if I'm going a little bit too slow for you, I don't jollipize. I'm so not sorry, because there's nothing about price that's just a quick little one size fit all definitive, this how it work every time. It's all about narrative, order flow, price delivery. All right. So this is my discount wick, right? This is my discount wick. If I have no knowledge, right? I have no knowledge about, we just swept some liquidity of some relative equal lows over there. All thing I know is I'm expecting that low to be hit, and all I have is my discount wick that I've graded, right? And it's below price when we open up at 9:30 up here somewhere. It's below price. Let's go to 15-minute chart so we can look at it when the 9:30 opened up, right? So come here, 9:30 open right there. All right. So when we open up at 9:30, right? Only thing I know is, right, this is our premium wick up there. This is our discount wick. All right. So we open up here and we drop down all the way into we drop below the high of our discount wick, right? Then we open up, we trade back up to the high of the wick. Then we drop all the way down, wick below the consequent encroachment, and then close just below. This is regular trade in our sell side that we have marked out. This is from yesterday PM, right? So we have taken out yesterday PM low. So our prior New York session sell side, we've taken it out there, right? We open back up, trade back up to the high of the wick, and get an institutional order flow entry drill on this SIBI right here, that 930 SIBI, right? Then we come down, and then we come here and we close on the next candle here, respecting that quadrant there, and right, go to consequent encroachment of that wick, right? So at this time here, right, what type of order flow is being displayed right around here from just these candles right here, right? What matter of fact, let me do this right here. Let's go to replay, right? And we're going to come back right there, right? So from 9:30 up until 10:30, when this candle closed right here, 10:30, what type of order flow is being displayed right here based off of the algorithmic levels? What type of order flow is being displayed here? Talk to me. I heard somebody TV. Actually with the daughter. Okay. Whoever it is trying to talk, I can hear your TV, but I can't hear you. Empire Trades, what type of order flow is being displayed here from this 9:30 open up here to 10:30? What type of order flow is being displayed based off of the algorithmic PD arrays and levels?
Bearish order flow?
Bearish order flow. Why is that? Tell me why it's bearish order flow. Don't just say because the candle's going down. Why is it bearish order flow?
Oh, because we're probably in the upper quadrants.
Nope. Quadrants ain't got nothing to do with order flow. Why is it bearish order flow? Tell me, come on, Smart Money Manuscript. What are the characteristics of bearish order flow? You just give me one. Give me one of the characteristics of bearish order flow. Come on, Smart Money Manuscript. Where you at? Come on, Empire Trades. Where you at?
Disrespecting PD arrays.
You gotta do better than that. Because you sound like you're asking a question, but you gotta do better than that. Come on now.
PD arrays.
Don't try to just change the way you say it. Come on. What? Give me some bearish order flow. It's on your screen.
Yeah, bearish order blocks. Ends up close candles. protected highs, liquidity sweeps above highs.
All right. So basically, when you looking at bearish order flow, right, you're gonna see price respect or reverse, or trade back to bearish PD arrays and respect them. Your bearish PD arrays are going to be above price. And when you trade up to it, it's going to respect it and trade back down. It's going to disrespect bullish PD arrays, I mean, it's pushing through it, right? Because if you're looking at the bullish side, right, it says that when price returns to this zone, you're going to find support and continue upwards. So that means it says the reverse of the bullish. So that means when it returns to this zone, it's going to find resistance and continue downwards, meaning respect the bullet bearish PD rate and continue down, right? That's what we mean when we say respect the premium PD arrays and disrespect the discount PD arrays. So when price drop down here, right? When we got to the high of this discount wick, right? This discount wick is a bullish PD array. It's a discount PD array, right? It's bullish because it's below price. It's discount, it's below price. When we trade down into the high of it, we don't bounce off, right? We trade down into it, right? With authority. Okay. We open up the next candle, we trade up to it, stop and ricochet off of it. Now this high is above price right here. So that makes it a premium PD array. We trade up to that premium PD array and we reject off of it. We're respecting a premium PD array right there. That's bearish order flow. We trade through that upper quadrant right there, right? We explore a little bit below the consequent encroachment, right? And we close below the sell side. We push through the sell side, right? That sell side liquidity, that's a discount PD array. We trade through it, don't reject off of it, right? We trade through it, right? And then when we come here, right here at 10 o'clock, right? What's happening right here on this 10 o'clock candle, right? This is the halfway point of the macro, right? So over here inside this candle, we start the macro, and over here, we're finishing the macro. Let's go down to 5 minutes so we can get some more detail. All right. So let's mark out our macro window here. All right. Tariq, like, man, I asked this man one question and he been going on for an hour and a half. Where's my, oh, all right. So 50, 950, 1010. Okay. This is our macro window right here, right? So we close down here, nice commanding close below there, right? In our macro, we trade down, trade below that low there. Okay. So we're coming down below a candle there on a lower time frame. We're taking liquidity. Okay. We come here, explore below the consequent encroachment a little bit more. Then we rally up. Once we rally up, we come back up to the high of this wick, right? So we come down, right, to consequent encroachment, go back to the upper quadrant, come down to consequent encroachment one more time, sweep liquidity, go back to the high, right? And it's all this right here is during the macro. So we engage liquidity, right? We come back up, engage the imbalance, right? And once we come back up and engage the imbalance, right, we stop up here. Now we've repriced that. And then we come here on the next candle, poke up, get an institutional order flow entry drill, right? And we respect that bearish PD array, right? Then we drop back down here. Then we come back up to that quadrant. So we're respecting bearish PD arrays, right? We create these up close candles right here. And then what do? We immediately close back down below them, right? So we're finding that resistance at up close candles, resistance at up close candles, right? Up close candles consistently acting as resistance, right? We're finding resistance, make up close candle, drop, close back below it, trade and back up into them, right? So you're seeing evidence of bearish order flow during this time right here. All right. Now, when we come over here, once we come down here and we stop short of that low right there, right? Now let's contrast what we saw here to this right here. Compare and contrast. We're going to compare and contrast, all right? Because it did something different. Okay. So we come here, we drop down after we, what we said, we respecting those those up close candles. We create more up close candles. Look at the bodies, respecting that upper quadrant right there. We drop down, take out the low there, trade back up, fail to get to the upper quadrant, right? Kissing that sell side that we had traded through, right? We drop down again, trade down below the lower quadrant here, right? Then we trade up, come all the way back up, fail to get to the upper quadrant, and then we drop down here, right? Right here, and we poke below that low right there. All right. So now when we come over here, because we always want to figure out what is happening when time meet price. Right. This is our macro window right there. Right. All right. That's our macro window right there. Okay. This is our macro window right there. Now, when we go into this macro right here, this is where the macro opened. What happened right before this macro opened? Right. Who can tell me what happened right before this macro opened? What happened? Somebody tell me what happened right before that macro opened up. Who can see it?
Price just went up.
No, right here, right? The macro opened right here. So what happened just before this macro opened up? What happened? Shout out Kim inside the YouTube chat. We swept liquidity right there. All right. So just before the macro opened up, we swept liquidity and failed to take out that sell side that we was looking at, right? So we swept liquidity here, right? And then y'all remember what we said when we had came down, when we dipped down into here. Remember, we was trading below some bodies over there somewhat, like the higher time frame bodies. Okay. So we get a manipulation of liquidity right there, right? And so the macro's job is to seek liquidity and imbalances, right? But it's looking for what? The liquidity and the imbalances that have not been touched, have not been traded through, right? So we just swept liquidity right there. So now the algorithm is like, okay, we just took out that liquidity. So let me go on up here and see what's going on up in this direction. All right. So as the macro open up, we trade up here. We're coming up, stop there, create a little small little sibby right there, right? Then we trade up there, trade up into that wick right there. Then look what happens when we come back down here. Boop, right? We use that lower quadrant as support, right? We drop down, use it as support, and close up here, right? So we open up here, right here. We trade up, take out that high right there. Okay. The macro time is over now. We trade up, we take out that high right there. We drop down, right? We respect that quadrant, right? We come down, take out that, respect that quadrant, right? We open up, right? We trade down into that wick, respecting the wick, right? Respecting the deep wick right here with this closure, right? We're closing well above consequent encroachment of the wick that went the furthest, right? Trade back up here. Then we open up and we trade up and we get above the consequent encroachment. So at this point here, right, we're starting to see signs of bullish order flow, right? Why do you say that? Because we create all these up close candles here, right? And then we drop down here, we respect this discount PD array right there, right? Then once we respect that discount PD array, right, we trade back up here, right? And we close above mean threshold of this down close candle, right? We open up, we trade down into mean threshold of the down close candle, and we close respecting mean threshold of the down close candle. Then we open here, drop down into the volume imbalance, then we trade up, still respecting the down close candle. Get up here above another, right? We pushed up, we're coming into a premium PD array, we push up in it and close slightly above it, right? We open up, trade down to the consequent encroachment, use it as support, push up to the upper quadrant. So right here, after we come down here, well, first we're respecting the lower quadrant, respecting the lower quadrant, respecting the lower quadrant, respecting the down close candle, right? Push through the upper PD array, the consequent encroachment. So disrespecting consequent encroachment, respecting consequent encroachment. It's a discount now, right? Respecting bullish, respecting bullish, respecting bullish, right? Pushing through bearish, disrespecting the bearish candle, right? Get up using the bearish candle as support, respecting bullish now. When we offer this price right here, this should now act as a bullish order block, respecting the bullish order block, respecting the volume imbalance, disrespecting the premium quadrant, disrespecting the premium wick, right? Closing above consequent encroachment, right? So the buy, we're seeing signatures of bullish order flow right down here where we're anticipating hitting this, but now we're starting to see signatures of bullish order flow, right? And not only do we see signatures of bullish order flow, right? While we're seeing signatures of bullish order flow, right? When we trade, once we get this breaking market structure right here, we trade up, we're starting to see bullish order flow. Man, we said we started seeing bullish order flow right here. We trade up, get a break in market structure right here. We trade back down. Where do we come back down to? Into the order block, right? We come back down into the order block. Look at the bodies of the candles, respecting consequent encroachment, right? And once we trade down into that order block and we trade back up here, right? And take out that high, what happened right here? What happened right there? I smile because I'm important, right? We just made an intermediate term low, right? Got sell side, sell side, sell side, right? I just drew it out so we can see it, make it pretty, right? Make it pretty for you. I just drew it so the face will make sense. But we got a swing low, and then swing low over here, right? You can actually use that swing low there. But the reason why I'm using this swing low is because when we came back down here, well, actually, this is here, there, once we took out that high there, right? I ain't pay that no attention to just now, right? So we got an intermediate term low that's down there that shouldn't be taken out, right? That should not be taken out, right? So once we got an intermediate term low, we're respecting bullish order flow. Now we're getting ready. Like I said, we're going into the latter portion of the day after a really large move, right? On the morning session. Now we're just should be anticipating a cooling off session. And not only are we anticipating a cooling off session, we've created a low that we should not take, right, until we do something, right? We should not take until we do something. All right. So once we set that low there, then we trade up here. As you see, we came up there, came really close to the high, right? Right there. We traded up here into the rejection block right there. And then now, once we opened up, right, prices dropped back down again here, down there to that lower quadrant, right? And looking like it's want to come toward those lows. But this right here, right? This right here are the small little details that may have been missed because we were anticipating this and we that close, we gotta take it, but we're not watching, right, the small details about what's going on. And all of this right here is just based off of that discount wick, not using any other PD arrays, right? But it could have just as well been looking at the new week opening gap and running quads on the new week opening gap, right? Because we go back there to that new week opening gap that's down there from the 27th, run the quads on there, same thing, right? Came down, bodies of the candles at that low there, right? We trade up, sweep the liquidity right there at the low close, just below the low. We swept that liquidity, right? But we're rejecting off of it. What's the reasonable target when we reject the low? The high that sent us there, right? We trade back up to the high that sent us there, right there at consequent encroachment of it. We trade back down into the order block. Where's that order block? It's intersecting with that lower quadrant the same way it intersected with the lower quadrant on the daily wick, right? We trade down into that order block right there, right? Push back up above that high, right? Once we took out that high, we came back down one more time into that order block, right? And all while we were hovering right around there, around that upper quadrant, I mean that lower quadrant. Then we trade back up, like we said, back up here above consequent encroachment again, and trade it up into the rejection block right there that we made during that 950 to 1010 macro, right? So the same concepts based off of a different algorithmic area, right? A new week opening gap as opposed to the quadrants of the daily wick, right? Nope, that's not it. Right here. All right. That's the quadrants of the daily wick. Exact same concept. Right. So if you understand what to watch based off what the algorithm has done, then right. And see that says Johnny J 722 put spooling inside there. That's how I got yesterday, because somebody popped in and say John iPhone, and I thought that was John from the Discord, and I'm assuming that's John from the Discord right there, that Johnny J, because it says spooling, right? And so when I saw John iPhone pop in there, I'm about to go back to a bad place, so I ain't gonna talk about that. Now, with that explaining, walking through, you know what I'm saying, the signs that could have been missed of not taking out that low, I feel like that was a pretty good walkthrough of the intraday price action, right? Do y'all agree? There anybody who, you know, still kind of like unsure about what price did today and why it did it? Anybody? Going once, going twice. All right, to then. I mean, that's all I got then. Anybody got anything for me? Any questions, concerns, comments? Appreciate the heart there. I don't know if that's light skinned Deborah or Jada. I don't know which one. It's under Deborah's name, but I think it's on Jada. No, don't try to do one now, Deborah. Too late. Don't try to do one now. All right, nobody got none for me. All right.
I got a question.
Okay.
If we were to take out the yesterday's load, would we consider? No. I mean, if we were to take out that low, would that be a bearish dealing range that we would set up today if we were to take it out?
I mean, we already set up a bearish dealing range on today's price action anyway. All right.
On 2 days?
Yeah,
Right.
because this is where we started at today, right here, right? So we started here today. We traded up, right? Came in taking out buy side, and then we traded down, coming down, taking out sell side. So from here to here, that's a bearish dealing range.
Oh,
I heard you say, "Oh, you sound like you lost." Talk to me.
What's
no,
up?
I mean, like, if I remember correctly, I always
Mute for me, Yolanda. Hey, Yolanda, mute for me.
Oh, sorry, guys.
Say that again now.
I mean, don't we have to take out a low to consider it as a bearish dealing range?
No, we taking out all kind of liquidity. We took out liquidity here, 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 here. All you got to do is sweep liquidity for it to be a dealing range. You just got to take out buy side and you got to take out sell side. So when we came here, when we traded up there above that high and then traded here below those lows, we started the bearish dealing range right there. Then we came up and we extended it. Then we extended it. Then we extended it. Then we extended it, right? So all this right here is a bearish dealing range. Only thing that creates a dealing range is sweeping liquidity on both sides. It don't matter if it's daily liquidity or intraday liquidity, right? Long as you take out liquidity on both sides of that range, that's a dealing range.
Okay, understand now.
Yeah. So it just depends on, like I've been talking about, you have daily order flow and you got intraday order flow, right? Just like you got intraday order flow, you got hourly order flow. Just like you got hourly order flow, you got minute by minute order flow, right? So you just have to understand what time frame is this dealing range based off of, right? So just because I'm looking at a 5-minute chart don't mean that I'm looking at a 5-minute dealing range, right? I have to understand how high of a time frame was this liquidity swept? Was it swept on a 4-hour time frame, right? Did we form this on a 4-hour? Did we form it on a daily? Did we form it on a weekly, right? Because if I put this on a 5-minute time frame, right, even though right here we're in a buy program right here, right, we're still in the midst of bearish order flow for this overall intraday time. You know what I'm saying? And when I say intraday, I mean from like a daily chart and lower. You see what I'm saying? Because from a daily chart, from lower than a daily, right? From lower than a daily, this, and matter of fact, let me put it on 60-minute chart so I can get to it, right? So for anything lower than a daily, right, we are still inside of a bearish dealing range, right? That's the highest high, that's the lowest low, and this is a bearish dealing range, right? Why? Because we took the high first, then took the low second. So price is moving in this direction inside this dealing range right here, right? But inside that dealing range right there, right, we've created, right, a bullish dealing range right there, right? Because we came down, took out a low, right? Then we traded all the way up, took out a high, right? And then we came here and took out that high. We extended it up to there, right? So we got a bullish dealing range that we're trading inside of right there, right? But inside that bullish dealing range, right, we came up and took out a high, right? When we took out that high, extending this bullish dealing range, right? We started a bearish dealing range because we took out a high, then we came and took out a low, then we extended it, then we extended it, right? So it's like, it's all about what time frame is this dealing range constrained within, right? Is this a time frame that I can be putting a whole lot of weight on as far as, oh, we gonna go and attack such and such liquidity, or do I need to, are we going to attack this monthly high based off of, you know what I'm saying? Are we going to attack this monthly high based off this bullish dealing range right here, right? I will put my weight on taking out maybe this daily high over here first, right? Because I'm in a sale program and I'm really just coming back to an area where I should be selling because I'm coming up against a bearish fair value gap. So I'm gonna bank on hitting this daily liquidity first before I start looking at this monthly liquidity up here and see how price trades in reference to this bearish fair value gap and this bearish premium wick right here before I start looking at that liquidity up there. All right.
So would you say the dealing range is still currently bearish from that small dealing range you just talked about, like today high?
That's what I say. It depends on what time frame, what time frame are you taking this from? Because I just showed you
From the last one, because we didn't take out a low. So is that dealing range still intact? That's what
we did take out a low
Mm.
on this bearish dealing range that I highlighted right here. We took out all these lows right here. Right, that's how we formed the dealing range. We took out that low. We took out that low. We took out that low. That's how we formed this bearish dealing range right here.
Right, but we did not take out the last low.
It don't matter. It don't matter when you take out that low. It's still a dealing range. Once you take out that low right there, you got a bearish dealing range.
Okay, so let's say if we were to take out that low and then it went back up, would we start a bullish dealing range?
If we take out buy side liquidity.
Yes, if we took out buy side liquidity and we started to go up. But because it didn't take out buy side liquidity, it would still consider a bearish dealing range.
If you come back up, if we trade down and take out this low and come back up and trade above that high, we got a bullish dealing range right here. You understand what I'm saying? Hello.
Yes, I understand. Thanks.
Yeah. I mean, we always got to remember, we have to remember the dealing range we're looking at, we only can trade within the confines of that dealing range. That's why y'all always hear me say, this dealing range is not invalidated until we trade here. This dealing range is not invalidated until we trade there. All right. Because you can have dealing ranges inside dealing range because price is fractal. Right. Price is fractal. Just like when we was looking at our 20-day look back. Right. Price has been bullish and bearish inside this 20-day look back multiple times. Right. It's been bullish and bearish inside this 20-day look back multiple times. But at the end of the day, this right here was a bullish dealing range because we took out the sell side first, then we took out the buy side. So we were inside of a bullish dealing range. But the whole time, I ain't gonna say whole time, but the majority of the time we was inside this 20-day look back, price has been in a sale program. All of this right here, right, was in that first 20-day look back we was looking at, and it's been in a sale program for the majority of that time. And this overall sale program is not invalidated until we make a new high above that month, until we make a new all-time high. this overall sale program near is not invalidated till we get there, right? Does that mean I have to try to force price to go there? No, because I have other points inside there where price is designed to be slowed down or stopped. So when I come into these PD arrays, when I come into these levels, I have to anticipate some type of resistance. How much resistance am I going to get? Who knows? What does the algorithm want to do? That's when we use our other little examples. Our other little algorithmic areas to say, okay, I'm going to trade back to this liquidity. I'm going to trade back to that liquidity, right? And we never try to force it to any, right? We never try to force it to any liquidity point, right? Especially when the sisters, look at the ES, look how far the ES is away from that sell side. Look at how far the Dow is above the previous day high. The Dow ain't even thinking about the low. The ES ain't even thinking about the low. So it's like we don't want to be trying to force a daily low after we've taken the daily high, and the other sisters ain't even trying to get there. You see what I'm saying? Right? It's like we're asking it to, we're trying to force our will on it because why? It's so close. Right? It's so close. Will it take it out? I don't know. Do I want it to take it out? I could care less. Right? Wait to see if it take it out, and then, right, I can start to formulate what do I want to do. Right? And why? Who can tell me why that is? Right? Who can tell me why? Right? At this point, right? Who can tell me why we really want to be cautious, right? Right. Why do you really want to be cautious at this point here? Who can see it?
We're in the middle of the road.
You got to say it right. You got to
We're
say
in the
it.
middle of the road.
Right. We're in between a bearish daily fair value gap and a bullish daily fair value gap. Right. We're right in between opposing fair value gaps. And if we look here, price spent a lot of time consolidating there. If we look there, price spent a lot of time consolidating there. So it's something about this area here that the algorithm sees as fair value, right? So whenever you see price just consolidate, like continuously consolidating in the area, that's an area where the algorithm finds, hey, that's fair value. And then now we got a bullish PD array and a bearish PD array resting above and below price, right? We're in between the tail of two cities. Who knows which way it wants to go, right? We've come down to a discount PD array and found support from, a higher time frame discount PD array. It found support, right? Now we're coming back. Now, not only did we find support at a discount PD array on the weekly time frame, right? We got a premium PD array on the weekly time frame that's designed to keep price down. So which one is going to win? The discount that you came into that's supposed to keep up, or the premium that's designed to keep price down? Who freaking knows? We're in between weekly PD arrays. We're in between daily PD arrays. All right. So when you find yourself in between opposing PD arrays, right, that's when we look intraday and we use these higher time frame algorithmic levels of support and resistance, and we trade per the short-term buy or sell program, right? Because right here, how many opportunities started at 9:30, right? How many opportunities started at 9:30 right here did the algorithm give to sell, right, in that first hour? If I saw one, I was probably chasing price, right? All right, let's see. We 9:30, right? We came here at 9:30, right? We retraced back up to the new day opening gap there, and we hit that during the 10:10 candle, right? So from 9:30 up until just say a little after 10. So the first 30 minutes or so, no type of opportunities, right? We just dropped sold off, right? And this is the first time we retrace back up into a premium to find, because there was no place to sell over here. We just dropped, no place to trade in a premium, right? We dropped down here, right? This is the first time we retrace back to a premium to get an opportunity to even try to participate. And then if you do try to participate, guess what? It did not hit the low, right? It did not hit the low. By the time you get a chance to participate, if you're trying to hold it to the low, if you didn't take it at this low, right here, if you didn't take it at that low right there, you were sorely disappointed because it didn't hit the daily low. It went back into a buy program after sweeping that 11:10 low, right? That's a macro time low right there, right? We came down here, swept that macro time low, going into this macro and start taking price back up, right? Did not take out that low of the day and did not make it to the lower quadrant of that daily wick, right? That's the lower quadrant of the daily wick. That's right there, right? Unable to get there. And then another thing, I'm glad I just pointed that out, right? Whenever we come up to that lower quadrant or that upper quadrant, right? What did Michael say that upper quadrant or lower quadrant may present us with?
Deeper retracements.
Deeper retracements. And it's not showing it didn't show a willingness to hit it here, right? Because that daily low, I don't know if you can see it, but that lower quadrant is right there in line with that daily low right there. Okay. So when we came here, unable to get to that lower quadrant, right? Came here, sweep liquidity, unable to get to that lower quadrant. And then that brought on a deeper retracement, right? Deeper retracement. Okay. So, but back to what we're saying about the buy and sell programs, the buy and sell programs, that's going to consist of your bullish and bearish dealing ranges. And you're looking when you're looking at a dealing range, right? So when we came up here and take out this high, right? As soon as we come back down and take out that low right there, right? We have just created a bearish dealing range here. Okay. So all right. So okay, as soon as we took out that low right there, right? Now we've created a bearish dealing range right there, right? So we created a bearish dealing range there, right? We trade back up here, then we extend it. We extend the bearish dealing range. Boop, dealing range extended. Okay. Then now that we got this bearish dealing range that we created here, traded up, then we extend it there. So now this is our overall dealing range. Okay. We trade back up into a premium, right? This is equilibrium. We come back up into a premium, hit the quadrant high right there, trade back down to equilibrium, right? Trade up, take out that high. Because we traded up to this quadrant high, we created relative equal highs right there. right? So we create these relative equal highs. Then we trade here inside of this macro window right here. There's a macro window right there. We trade up above these relative equal highs, right? We take that out, then we come up and we fail to take that high right here at that upper quadrant, and we drop down, right? We drop down, trade back up. So when we trade it up here above that high, right, and drop down there, right, and drop down here, right, inside of this bearish dealing range, right? We created a bullish dealing range here, but we need this bullish dealing range. Why? Because inside this bearish dealing range, we want price to come back to a premium to give us an opportunity to participate in this bearish dealing range, right? So when we anchor this here and anchor this there, where are we looking for opportunities to participate in this bearish dealing range, right? Up here in the premium, right? Up here in the premium. Okay. So we come up here, right? When we get up here, we get a manipulation of buy side. When you're bearish, what do you want to see? You want to see a manipulation of buy side, right? So we're back in a premium. We manipulate buy side, right? And then we start to break down, right? Once we start to break down, we trade down. And now that we trade down here, boom, guess what we just did? We just extended our bearish dealing range right there, right? We extended our bearish dealing range there, right? When we traded down here, we extended it, 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 right? So right there, we extended it. And now when we're looking at this here, right? Now that we've extended our bearish dealing range all the way down here, right? Now, when we look at what we've done, we're not waiting for price to come back up here to give us an opportunity to participate at a premium. Why is that? Because we offered sell side delivery, we offered buy side delivery all throughout this area here, and then we're leaving this area there, right? So what are we looking at? We're coming from our order block right here when we left that area there and down to the low right there, right? This is our latest expansion of our overall dealing range, right? Right. So that's our overall dealing range. That's the latest expansion right there. Okay. What we do, we trade back up into a premium, right? We got a fair value gap here. We got a fair value gap there, right? Okay. This is our fair value gap up here in the premium. Okay. Right. We trade back up here, right? Into the premium, right? We trade up into that fair value gap. What is that trading up into that fair value gap giving us right there? A manipulation of buy side on a lower time frame, also giving us an institutional order flow entry drill. And we come down, extend it, right? So now, right, we've extended our sale program, right? We're extending our sale program. We've already traded back up to a premium here, right? So we can just watch it from there. That's our latest expansion leg there, right? We trade back up to a premium again. We come down, right? And we take out the low right there, right? So we extend it again, right? So now we came back up to a premium there, right? So now, right, we're watching here, right? We're watching it because we already came back up to a premium. Although this here was our entire dealing range right there. That's our entire dealing range. But now we've already handled this. So now this is the latest expansion leg that we're watching, right? But what happens inside this expansion leg here, right? We turn around and trade all the way back out the top, right? So now we've went to external liquidity, right? We've just, you know what I'm saying, turned around right there. So now this is where we created that bullish dealing range. We made a low, we made a high, right? We created a bullish dealing range. And this is the area where we started showing signatures of bullish order flow, right? We started showing signatures of bullish order flow over here as we was climbing the ladder back up, Because whenever we're watching a dealing range, if we anticipating it to be bearish, right, we want to see it like come back up to a premium and then start using like resistance, 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 right? But if we're inside of a bearish dealing range and we get back up to a premium and then we come back here and support, 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 right? It's a good chance we're showing bullish order flow. So it's a good chance we're going to go back up for X amount of time, right? So that's why I say it's all about how is what time frame or what time frame is this dealing range that you're watching? What time frame is in control of that, right? Is it just a 5-minute time frame? Is it a, like looking at this right here, right? This little piece of range right here, right? And we go up to a 15-minute time frame. Okay, on a 15-minute time frame here, that right there, that's just that we didn't even sweep any liquidity going up, right? All we did was retrace and drop back down, right? We retraced and went back down there, right? So on a 15-minute time frame here, right, come this little area right there, that's really insignificant. So I wouldn't even be trying to force this outside of that 5-minute range, right? I wouldn't be trying to force that outside of that 5-minute range because that's just insignificant when I get back to the 15-minute. And then when I look at the 60-minute, it's just one candle. You know what I'm saying? It's just one candle. So that's totally insignificant to the 60-minute time frame, right? On the 60-minute time frame, this right here is the bearish range that you're still within, right? You're still trading within that bearish dealing range right there. This little move here is totally insignificant, right? And that's your high. Well, this is your highest high. This is your lowest low, right? Right? Traded up, drop down, right? We got this SIBI right there in the premium, right, for the 60-minute time frame. So down here, this is totally insignificant to the 60-minute time frame. So if I'm looking at, right, if I'm looking at how can I get a buy inside this range right here on the lower time frame, right? If I say I came from this low to that high on the lower time frame and formed the bullish dealing range, when I retrace back down here to say if I'm buying off of this, I'm not trying to trade back up to that high, right? I'm only trying to trade back up to that high, right? Because that's the high of the range, because I'm looking to extend this bullish dealing range on the lower, like if I come to the lower time frame, right, from this low up to this high, I'm looking for it to come back to a discount and then extend this range. So I'm looking to go back to that high. I'm not trying to force it to this high because this 1 minute and 5-minute time frame is totally insignificant to this 60-minute time frame, because the 60-minute time frame is still inside of a sell program based off of this piece right here after this dealing range right here. All right. Hopefully that makes sense to everybody. All right. I think a lot of times we get caught up in the idea of the PD arrays or the concepts are absolute. They're not absolute. Time and price is fractal, right? Everything about time and price is fractal. So if dealing ranges, if order blocks and fair value gaps and all of that is fractal, if market maker models are fractal, then dealing ranges are fractal. So I can be just like we talk about, right? We have like a huge market maker sell model, right? But within that market maker sell model, you can have market maker buy models, market maker buy models, market maker sell models, market maker sell models, right? All market maker buy models, all of that is inside of this one market maker sell model, right? So you can have multiple market maker buy models inside of one market maker sell model or inside one market maker buy model, because everything about it is fractal. And if you're inside this market maker sell model right here, right, you get on the right side of this market maker sell model. Is it wrong to take a buy inside this market maker buy model right here and go from here back to that high? No, it's not, right? But you got a market maker buy model right there, and you're on the right side of a market maker sell model, right? If you're on the market make right side of market maker sell model, you should be looking for a reason to sell in a premium. But who's to say if I know I'm supposed to be looking for a reason to sell in the premium, if I come sweep liquidity, right, and right set up a bearish dealer range, where am I looking to sell it? In the premium. Who says I can't buy something back to that liquidity in the premium, right, and just get out there and make my money and not have to sit there and worry about, okay, once I get back here, is it going to give me a sell signal during my time I'm watching the charts? Then it get up here and it don't give me what I want. And then I get frustrated and start trying to make it happen. And I get chopped up and take it out, right? Am I wrong for completing that market maker buy model? No, I'm not wrong, because I saw it, I traded it, I took my profit, I completed it, right? If you understand order flow and price delivery, you can choose to trade discretionarily, right? Do I want to trade bullish when it's bearish? Do I want to trade bearish when it's bullish? Do I want to wait until all stars align and trade bearish when it's bearish or bullish when it's bullish? You can trade how you want to trade. If you see it, you see the algorithmic signatures, you take the trade, you put your risk on, and that's it. And now you can do about it once you push that button. Can't change the trade. Nah, you in it. That's all I got, man. Anybody got anything else for me?
Were you, I had to run errands. Did you, were you able to watch that video? Did y'all jump back on?
Oh no, I didn't. I didn't watch
Okay.
it.
All right.
Matter of fact,
Now, whenever you watch it, if you don't mind sharing your thoughts.
yeah, nah. What I was about to say is I'm about to when I get off here, I'm about to jump in the shower, then eat. I already got my food. I bought my food. I'm gonna jump in the shower, eat, and then because when I was about to get off and say I'm about to do a watch party, but then Empire Trades, I started questioning, and I kept running my mouth about another 40 minutes. So now I got hungry. So I'm about to jump off, take a shower, eat, and then I'm gonna sit down and watch the video. And I'm gonna be inside the Discord for anybody who wanna watch the video with me. So do we have anything else from anybody? But you already watched it. What you worrying about it for? You already looked at it.
I just wanted to get your thoughts on maybe he's just re-emphasizing the importance of that first 30 minutes, no matter what session.
I mistook him.
Man,
What's going on? How you
Man.
doing?
this was not your opportunity to shine.
Hey, that's my buddy, man. Hey, how you doing? Don't get in trouble, buddy. But hey, how you doing? I'm doing good. Hopefully you're doing good. Who is that? Is that the artist or that's somebody else? Who is that?
That's
Campbell.
the baby Campbell. There she goes. She'll tell you.
Oh, that's Ken. Okay, what's going on, Ken? How you doing?
Good.
That's good. That's good. Are you the one that plays soccer or somebody else?
I play soccer.
They all play soccer. So
Oh,
the
they
other,
all play soccer.
other two at practice, and her practice is Tuesday, Thursday. So she'll have an off day.
Oh, you got an off day. Well, that's good. I don't know about where y'all stay, but it's cold in Columbus, Georgia. So if it's cold where you at, I know you glad you ain't got to be outside.
Where?
We got that psychotic weather down here in Houston. It was freezing 2 days, and now we back to the 80s. It's crazy.
Oh yeah, it'd be like in the morning. It'd be like yesterday. Well, day before yesterday it was like 26 in the morning, and then yesterday it was like low 30s, and then today it was like mid. It was like either mid 30s or high low 40s. I can't remember, but it was cold. But every day around by noon, it'd be like 60, 65. So it's like it'd be hot. It'd be hot again because you go from 29 to 65. It's like you sweating. So it's crazy. Georgia always have bipolar weather. But that's all I got. Hopefully y'all got something out of this. Again, don't try to make everything about the concepts absolute, right? Don't try to make it absolute because time and price is fractal, right? That's why we have like little boxes, right? We can trade within the confines of that box. If it busts outside of that box, right, then we start to broaden our horizons, right? We have higher time frame dealing ranges. Where are we in that higher time frame dealing range? Are we in a discount? Are we in a premium? Right? We have lower time frame dealing ranges. Where are we in that lower time frame dealing range? Are we in a discount? Or are we in a premium? Right? If you're trading intraday, right? The higher time frame dealing range, that's the catalyst for the overall move of where price is trying to get to that week, maybe that month, that day, just depending on where you are in the higher time frame dealing range. But when you're on those intraday dealing ranges, that's going to be your bread and butter setups are going to come based off of that intraday dealing range. And when that intraday dealing range aligns with that higher time frame dealing range and it's time to go, you'll have a tiger by the tail. You know what I'm saying? Then you can get those grand moves that everybody like to get, where it just runs all the way down to that sell side liquidity on the day. All right. But if the higher time frame is that little willy wonky spot, right, then we trade within the confines of that intraday dealing range. And then if you're looking at a dealing range that's confined within an hour, then you really got to confine it within. But guess what? An hourly dealing range, cheese and rice, that's good money on the NQ. Right? If you got a portfolio that can allow you to trade the NQ, man, an hourly counter on the NQ can set up a dealing range of over 100 points easy. You know what I'm saying? And if you got over 100-point dealing range, you can snatch 25 points out that dealing range easy. You know what I'm saying? That's a good living. 25 points on the NQ is $500. That's a good living, you know? But you know what I'm saying? I get it. We all be wanting to get those. I made a $10,000 trade today. Oh, I made it. I made $6,000 today. Oh, I made it. Everybody want to swing for the fences. Everybody want to swing for the fences. You know what I'm saying? I traded 3 different accounts today. I made about $500 in 2 accounts. I made about $900 in another account. All right. Could I have made more? Yeah. You know. Do I wish I would have made more? Sure. I always want to make more. Am I upset that I didn't make more? No, I'm not upset. Why? Because I hit my profit target that I was shooting for. And I was out. I went to the gym. I went and took my kids to the dentist. Anyway, I'll see y'all later. If y'all want to join me for the watch party, right? If it's too late, and I understand, I get it. But once I get out the shower and eat, I drop the bat signal inside the Discord, and then we'll do the watch party. If this was your first time tuning in to Tim's Tidbits, you probably not here no more because we've been on here a long time. But if it is your first time tuning in to Tim's Tidbit, I appreciate you, man. Hit the like button. Share this with somebody who you think might get something out of it. If you didn't get nothing out of it, I promise you I'll do my best the next time to help you get something out of it. But until the end, it's your boy Timothy Lee Ross, aka Aranya Grande. That's just Big Spot if you don't upload Espanol. Y'all be safe out here, these trading streets, man. Gone.